Hi friends, Simon here from InformedTrades.com. Today is Friday, December 11th, 2015. Time for a look at our our charts, see how the markets have changed over the past week. Right now on the screen right now you're seeing the FXCM dollar index. Basically what I thought was interesting or worth highlighting about this chart, a couple things. One, we're right at the 50 simple moving average, just blue line here. Also, we broke out above this trend line. We made a clear break above it back November 5, so over a month ago. And then we spent a fair amount of time above it. We came back, we tested it once here, December 3rd, and now we're still testing it this week. So I view this as, testing this trend line, which I think was expected. We sort of, it didn't happen right away. We had, after the breakout on the 5th, it took really up until almost the whole month for the market to come back down. But now we're testing this trend line. If this test holds, it could really pave the way for the next leg up. Right now, it seems like it is holding. Yesterday's candle was, one could look at that as a hammer pattern. Let me zoom in a little bit. Small hammer, there's the wick, it tested the trend line, it bounced back off, and it ended up being an up day. So today we also have that, and we also have the 50 simple moving average here. So if we can defend this level over the close of today and early next week, I think that sets the stage for a move past here 12200, or at least a retest of that, probably higher. Okay, so that's the FXCM dollar index here. The futures dollar index, same type of story. We broke out here November 5th. We rallied up, boom, big crash down to support on December 3rd. We did close a little bit above it, but now we're back above that line. We also have the 50 simple moving average here. Same idea. If the support level holds, if we stay above the 50 simple moving average, close above it, that may set up a move back to 115, if not higher. And I think, as I mentioned, I think it would go higher. Dollar yen. Okay, so we are related to this, the U.S. FXCM dollar index and the futures dollar index. We saw that pattern of a breakout, and now we're testing support. We also see that on dollar yen, which makes sense. Dollar yen is a dollar pair that's sort of a part of the other indices we just looked at. Here, it also confirms the pattern. Some tight candles here, so this suggests a battle is going on between bulls and bears at support with the 50 simple moving average right here. Something to watch over the next few days. I'm long dollar yen. This is the one way I'm in this trade. I've got long a while ago. I've been holding the position for some time. I added some right here in October, so it's slightly in the money, but I'll be holding this out for a much larger gain is what I'm looking for. As I've mentioned before in previous videos, I really am looking for a monthly chart, a test of, you have to go even off the monthly, further back. I'm looking for, all the way up here, a retest of this level before I close, a bare minimum. Euro dollar, okay, so here, we're looking at the monthly chart. Let's go back down to the daily. Let's zoom in a little bit for clarity. Okay, so same idea here. Or a little bit different here. I guess it's inverted in that we broke out down. So we broke down here in November. Then we rallied back up, tested that level that we broke down of, and now we have the 50 simple moving average here. So the dollar is facing the 50 simple moving average everywhere. I think now could be an interesting time for this to go back down to 105. Let's actually, this setup actually makes me think of Fibonacci. So let's see how the levels play out. Okay, so we're also right at a 50% Fibonacci retracement from the swing high on October 15 to the swing low on December 3rd. So we're right at that 50% Fibonacci level. We also have the 50 simple moving average here. I think this could pave the way for another move down and perhaps breaking 105, going well below that. Maybe we'll see parity. High-grade copper, we talked a bunch about this over the past few months. There's an AB equals CD pattern here. That pattern is completed. We are now seeing a small pattern of higher lows. So we talked about this, at 204, the pattern is complete. Will we go back, rally up to the 50 simple moving average here at 222? Possibly. I think that's something that's interesting. Let me also draw another, where's this Fibonacci coming from? Oh, yeah, there. Okay, let me draw another Fibonacci retracement level to go from, let's say, this swing high And that makes sense. You know, a move at 222 puts us right around the 50% retracement from the swing high. I think that could be an interesting level to target for high-grade copper. Dollar UN. This is interesting in that we haven't really had as much of a. The pattern is a little bit different here on the dollar UN in that it's still rallying, right? So we haven't really had that pullback from December 3rd. It's going up. So now we've closed above. What is interesting here, especially, is that we've closed above this major resistance level that was really highlighted here, the long wick here, August 24th. We had a spike above it yesterday. Or 2 days ago, we closed above it now. So does this set the stage for a move to 659 up here, this green line here? Possibly. I definitely think that's a possibility. Crude oil, oh boy, we are now at 36. So I am long at 44. I'm looking to enter or add more to the position real soon. What I want to see is an accumulation pattern. Let's actually zoom out to the weekly chart. Oh, we may actually have to go further. Let's try the monthly chart. Okay, so here we go. We're now in this range here, and what I'd really like to see, let's do some drawing. That area in yellow that you're, oh, didn't stick. There we go. That area in yellow, let's actually change the color. What color should we make it? Let's make it green-ish. Oh, that's not a good shade of green. There we go. That's adequate for our purposes. If we can spend some time in this area, form an accumulation pattern here, I think that'll be a really interesting buying opportunity. I'll also be bearing in mind the geopolitical situation. The tension has been escalating in Syria, with Russia's involvement. So let's see if that, that conflict becomes more aggressive, results in more war, which would send the price of oil up as well, likely. S&P 500, we are now, let's go back to the daily chart. We are now above the 50 simple moving average, which just crossed above the 200 exponential moving average. So we had a golden cross that occurred on December 4th. S&P 500 is now above the 50 simple moving average. I think that's bullish. However, for me to become especially bullish or bullish with great conviction, I would like to see price get back in this channel here, get back above 2100, really clear this level here, 2110. As I mentioned before, I did close some of my equity positions on the break of this trend line here, some of the growth and momentum stocks I had. I do still have some value stocks, and I am adding stocks that I think are, that are yielding good dividends at a low valuation. So if I see stocks that are cheap and yield income, I'm still buying them because I think the market as a whole is more likely than not, in my opinion, to head higher. That's sort of the way I'm looking at things. And that's about it. Any questions you have, anything you want to add, join us at InformedTrades.com. If you like this video, please like it on YouTube, share it on Facebook, Google+. That helps us grow and helps us continue to make more videos. Best of luck in your trading and investing. We'll see you next time. Take care.